Hi everyone, welcome back to the channel. Today we are diving into the latest developments in Australia's real estate market, and there's a lot happening right now. Most importantly, interest rates in Australia have increased for the second consecutive month, and that's starting to ripple across the housing market in a big way. So what does this mean for buyers, sellers and investors? Let's break it all down. Over the past few years, Australia's housing market has gone through dramatic changes. After a strong post-pandemic boom, with prices skyrocketing across major cities like Sydney, Melbourne and Brisbane, we are now seeing a shift. Property prices in some regions have started to stabilize, while others are experiencing slightly decline. At the same time, demand remains relatively strong due to population growth and housing shortages. But the biggest factor influencing the market right now is interest rate. Australia has now seen interest rates rise for the second month in a row. This is a critical development because interest rates directly affect borrowing power. When rates go up, mortgage repayments become more expensive. Buyers can afford less. Demand tends to cool. For example, even a small increase in rates can significantly impact monthly payments on a typical home loan. This is why we are starting to see a more cautious approach from buyers. For buyers, the environment is becoming more challenging. First, borrowing capacity is shrinking. Banks are tightening lending conditions and higher rates mean you qualify for smaller loans. Second, affordability is already stretched. Australia remains one of the least affordable housing markets globally, especially in major cities. However, there's also a potential upside. With fewer buyers in the market, competition is easing slightly. This means less aggressive bidding wars, more negotiation power, possibly better deals. So while it's harder to enter the market, those who can may find better opportunities. Sellers are also feeling the effect. During the boom years, properties were selling quickly, often above asking price. Now things are changing. Homes are taking longer to sell and price expectations are adjusting. In some areas, listings are increasing. Auction clearance rates are dropping. Sellers are becoming more flexible. This doesn't mean the market is crashing, but it does mean the balance is shifting slightly towards buyers. For investors, the situation is mixed. On one hand, higher interest rates increase holding costs, profit margins may shrink. On the other hand, rental demand is extremely strong. Vacancy rates are very slow. Rental prices are rising in many cities. This creates an interesting dynamic. Some investors are exiting due to higher costs, while others are entering the market to take advantage of strong rental yield. Another key piece of the puzzle is supply. Australia is currently facing a housing shortage. Population growth, especially through immigration, is increasing demand, but construction hasn't kept up. This imbalance is keeping support property prices, even as interest rates rise. So, while higher interests are cooling demand, limited supply is preventing a major downturn. Looking ahead, the big question is, will interest rates continue to rise? If they do, we could see further pressure on prices, reduced borrowing capacity, slower market activity. But if rates stabilize or start to fall, the market could quickly rebound. Australia's property market has historically been resilient, and many experts believe it will remain strong in the long term. So to sum it up, interest rates in Australia have increased for the second month in a row. Buyers are becoming more cautious. Sellers are adjusting expectations. Investors are facing both risk and opportunities. The market isn't collapsing, it's evolving. Now, let's extend the discussion and talk about where housing prices in Australia might be heading next. Forecasting property prices is never exact science, but there are some clear trends and expectations emerging. Many analysts predict that price growth will remain slow or moderate in the short term. In some areas, especially those that saw the biggest boom, we could even see slight declines. Why? Because higher interest rates are continuing to limit how much buyers can borrow. That naturally puts downward pressure on prices. However, there's another side to the story. Australia still has strong population growth, limited housing supply, high construction costs. These factors are acting like a floor under property prices. So instead of sharp crash, most forecasts suggest a period of stabilization stabilization, small fluctuations depending on the region, gradual recovery once interest rates ease. It's also important to understand that not all parts of Australia are moving in the same direction. For example, Sydney and Melbourne, which are the most expensive markets, tend to react more strongly to interest rate changes. Meanwhile, small cities like Adelaide, Perth, or regional areas have sometimes shown more resilience. Why is that? Because prices are generally lower, demand is growing due to immigration, lifestyle changes are driving regional interest. So when we talk about forecast, we are really taking about multiple markets within one country. Some areas may cool while others continue to grow. Let's now look at what Australian media outlets are reporting. Overall, the tone is cautious, but not overly negative. Many headlines focus on rising mortgage stress among homeowners, the impact of consequtive interest rate increases, affordability challenges for first-time buyers. At the same time, media reports are also highlighting strong rental demand, record low vacancy rates, continued population growth. Some outlets are even describing the market as being in transition phase rather than a downturn. In other words, the narrative is shifting from boom to balance. Now let's talk about what property experts and well-known voices in Australia are saying. Many local real estate analysts emphasize resilience. Their key points include the housing shortage is real and ongoing. Demand continues to outpace supply. Long-term fundamentals remain strong. However, they also warn about short-term risks, high interest rates, increased cost of living, potential for reduced borrowing activity. Some experts believe that we are entering a period where investors need to be more strategic, buyers need to be more patient, sellers need to price more realistically. This is no longer an easy, fast-growing market. It's becoming more selective. What about the global perspective? International analysts often compare Australia to other major housing markets like the US, UK, and Canada. From a global point of view, Australia stands out for a few reasons. First, its housing market has been incredibly resilient over time. Second, supply constraints are more severe than in many other countries. Third, immigration continues to support demand. However, global experts also highlight risk. Australia has high household debt levels, strong sensitivity to interest rate changes, expensive housing relative to income. Because of this, some international commentators suggest that Australia could be vulnerable if rates stay high for too long time. But again, most stop short of predicting a major crash. Instead, they expect a slowdown, periods of price correction, followed by long-term growth. Looking ahead, there are several key risks that could influence the market. Number one, further interest rates increases. If rates keep rising, affordability will be squeezed even more. Number two, economic slowdown. If unemployment rises, fewer people will be able to buy homes. Number three, construction slowdown. If fewer homes are built, supply shortages could worsen, pushing prices back up. So the future of the market depends on the balance between these forces. So what's the overall takeaway? Australia's housing market is at a turning point. We are seeing interest rates rising for the second month in a row, buying relatively becoming more cautious, prices stabilizing rather than booming, strong long-term fundamentals still in place. Forecasts suggest we are entering a more balanced and sustainable phase, not a collapse. And that's deep dive into Australia's real estate market. If you found this analysis useful, don't forget to like the video and subscribe for more global insights. Let me know in the comments, do you think Australia housing prices will rise or fall in the next year? Thanks again for watching, and I will see you in the next video.